Hello traders, this is Blake Morrow and you are listening to the week ahead video for July 26, 2020. I just want to let you guys know that I am filming this just a little early, and the reason why is, well, it's for logistic reasons for our team, and so we had to get this video out just a day earlier than I normally do. Reason why I'm mentioning that is because there may be market influencing things that could happen over the weekend that could alter the way currencies open or futures open. So I just want to let you guys know that. But we're going to cover, what happened last week, what we're looking for going into this next week, because there's a lot of big technical setups. But before I do this, I need to make sure I mention that if you have not tried out ForexAnalytix, it is only $1 for 10 days. $1 for 10 days. Download the mobile app while you're trying it out. Doesn't matter if you're using the premium version or the light version. Moving forward, you're going to get to use the premium version right now. So the reason why I mention that is because when you download the app, and by the way, you get the app with either version as well. Make sure you go to our chat rooms that are going to be located right here, right next to your icon, your avatar. You'll see it right over here. Once you launch that chat room, that's where you're going to find myself and other traders there throughout the course of the week. Weekends, no one's really ever in there, but during the week, we're all very active in there chatting about the markets. So anyway, let's get to it. Let's talk about this last week. And just so you guys know, a lot of the analysis is not done. Typically, I do the basic and candlestick technical analysis throughout the course of the week. On the weekend, other team members will fill in and do the analysis. So if you're looking for my analysis in particular throughout the course of the trading week, every end of day basic technical analysis is going to be my analysis. Unless I happen to be away from the office that day, but for the most part. And then the intraday analysis is just myself and the rest of the team. We're uploading analysis all throughout the day. The euro happens to be done right now, but I'm going to be going over to my own chart so I can draw on them for you. So I just wanted to point out how you get to the different type of analysis, whether you're looking at harmonic, Elliott wave analysis, basic technical analysis, candlestick, or macro, and you want to understand what is the big macro drivers behind a particular currency pair. So let's talk about the euro dollar, and let's talk about how important this resistance level that we're at currently, where we closed at. Now I'm going to be very from a technical perspective, I want to talk about the euro pretty carefully here, because the analysis is going to be different depending on how you draw things. So first and foremost, one of the traders in our chat room brought it to our attention earlier this week about the long-term trend line coming into play, and I knew it was coming up in this area, but it made me actually take a really much closer look at it, because I knew we were getting close, but it was more important that other people started seeing it as well. And so that's just one of the benefits of looking in the chat room, and that's what provoked me to actually take a really good look at the euro dollar where we're at. So if you look at this weekly chart and you take a look at this pink line, this is a weekly trend line, right? All right, so let me undo these magnets. Okay, so what you'll notice here is that where we started in 2008, okay, and where we're currently at right now. If you go to the very top of that trend line, or that spike high back in 2014, okay, you'll notice that the trend line will come in right around the flag pattern target. Now, if you've been listening to these week ahead videos or the daily webinars, you know that I've been focused on this bull flag pattern in the euro dollar for quite some time. So it is playing out, obviously. Now, one of the things that like I said, that we'll see that it's an A B C D USD target is going to take us to 118 eventually. Doesn't mean we're going to go up there tomorrow, but we have actually, you know, made some pretty good ground this week. I mean, you can see this week we've gone from 114.50 to 116.50. That's a 200 pip rally, right? This week, and you guys were very well prepared for that watching last week's week ahead video because of the EU EU meeting. We were expecting this to happen. So you know, the question is, can we rally another 150 pips this next week? Absolutely we can. We just rallied 200 pips last week. Why couldn't we continue that rally this week? I do think that we might find some resistance here, and the reason why is if you go to the weekly chart again, and let's draw this trend line a little differently. Okay, now if you take that trend line, you start connecting as many highs as you possibly can, or many points. I like to look at points of contact. So you got one here, right? So let's draw this out. Point of contact here, right? Points of contact here. Where you're talking about this one, you know. Look at all those other little highs right through there, right? Then right through here, got these other highs all through here, right? And actually you can even go like that and say, all right, well, I got 1, 2, 3, 4, 5. And then if you look where we're currently at, right over here, that means Friday's close. We are basically on it, right? So question is, do we stop near here? My opinion is we may, but I look at the dollar index, the broad dollar index, and man, it looks bearish. We had a bearish close below the spike lows in March. Okay, and then also we have, you know, this bear flag pattern takes us all the way down to, and let me go over to the daily chart here. You know, it points to this longer term trend line as well, and also these lows from back here in 2018. So I think that's where we're going first. So if that's where we're going, that means that the euro dollar is probably going to go even further than we're currently at. So I think maybe that 118 level is more doable in the euro dollar, but it is going to get a little trickier. It was, in my opinion, it was a much easier move once we went through 115 in the euro dollar. Now gains from here are going to be a little bit trickier. What I'm hoping for is that this next week we do pull back a little bit and then continue that rally. I'm hoping. Just because I hope that's going to happen, that doesn't mean it's going to happen, because there's a lot of other things that are moving currently, not just the euro dollar. So let's talk about in conjunction to the euro and the dollar index. I am going to take a look at a couple other major currencies that are moving the market. You know, obviously the cable, the Aussie, the Kiwi, the yen now, and then also we're gonna have to talk about gold, guys. And gold hasn't been updated yet, but I mean, look, we're breaking out, and we're currently trading at 1900, right? So we're gonna have to talk about gold and silver. So there's a lot to discuss. But what's one thing that could actually stop the euro dollar from rallying this week and could quite possibly move the needle for the dollar in the other direction? Well, there's a couple things. First of all, we have the FOMC this week. Now, although we're not expecting the FOMC to really do anything, they might start laying the groundwork for the yield curve control. That's quite possible going into into September, into the September meeting. But the Fed might start laying more of the groundwork for that. What I think is going to be more important, quite possibly, that might move the dollar, would be the advanced GDP numbers that are on Thursday. The market's actually looking for a loss of 35% quarterly GDP. I know that's, it's a shocking number, but remember, this is, the market is already expecting that anyway. But look, if the market comes in, if it comes in a little bit better than expected, and people see that this COVID rebounds a little bit better than expected, maybe that's the catalyst that drives the dollar, at least to a bounce. I think it's possible. But that's not until midweek this next week. So as we go into the beginning of the week, there are things that are happening that I think are very important from a technical standpoint, like the euro dollar up against that resistance. Look at the dollar yen. The dollar yen closed basically at 106. It was probing below 106, but more importantly is you'll see we were in a, what is that, 2-week range in the dollar yen, and then just, flush through that support. And if the dollar continues, the dollar yen could actually, trade down towards the 104.50. This is a long-term 618 retracement here. You see it right here. We could trade all the way down to 104.50. And the dollar yen, I know a lot of people, still are looking at, well, what's moving the yen? Is it equities? Is it, what's actually the driving force with the yen? I think it's more mergers and acquisitions right now, but also it could be bonds. And if you look at the bond market, the 10-year, by the way, we're on the cusp of breaking out here, and that would be the 10-year yield dropping towards zero or towards negative territory. Which is still, that hasn't been a topic of conversation for a while. That doesn't mean it won't be. But look at the 10-year bond market. I mean, it's just threatening a breakout, and if that happens, yeah, you're going to see yields probably drop once again. And we're at 0.6% right now. So watch that. That might be a mover of the dollar yen, which then could continue to fuel that downside move in the dollar index. A couple last things I want to talk about regarding the currency market, the cable. So I'd been pretty bullish the cable all week, but the last couple of days it has not given me the opportunities that I wanted to. I think I spent this week buying the pound below 127 and selling it back at 126.20s, 120 or 127.20s, 127.30s. I did that twice, this dip and this dip, that I'd buy it overnight. Okay, then towards the end of the week I was trying to get another dip below 127, just didn't happen. And now the problem with the cable is we've closed. I say the problem, it's not a problem if you're bullish, but the issue with the cable trying to buy dips is now we're above the 200-day moving average. We're well above the 200-day moving average. We're well above this broken trend line. And the fact of the matter is, if we get a foothold above this 128 level, we should see 130 and quite possibly 131, 132, the low 130s once again. And if you look really at, and let me grab something for you. Let me delete that, and let's delete the, and just so you guys know, this is such a shallow retracement. This is only a 38% retracement, so that means that realistically you're talking about an AB equals CD type of move that should take us up towards 129 and change. But what could really happen here is you take this high to this low, and then the 161% extension takes us to 131.80, which is also the spike high from pre-COVID, whatever, pre-lockdown, right? So this all comes in right around the same spot, around 132. So that seems very logical for me, and that's why when I look at the dollar and I look at where the euro's at, that's one of the things that I start thinking, man, if the cable makes its way up to 132, that means the euro is at least at 118. The dollar yen is at least at 104.50. So, for those of you that are starting to think, and this is the problem with being a trader, is traders look for reversions to the mean all the time. When I'm talking about traders, I'm talking about you guys, not institutional type of traders. I'm talking about people that are day trading, people that are proprietary trading, that type of thing. I know the natural inclination is to just start fading these big moves. You're like, wow, look at this, we're way overbought. There's no way it can continue higher. For me, I'm just looking to buy dips. I think this is such a strong dollar sell-off that I just want to see the dollar bounce a little bit so I can sell into strength. I'm not interested in shorting the euro at this point. When you think about the dynamics of why the euro is rallying, I want you guys to think about that from the last couple of weeks. The EU has now come to a fiscal integration, if you will, by putting together this COVID response. No, it wasn't the dollar amount that we're looking for. No, it's not the end all be all of what the European Union can do, because they still haven't issued bonds, and there's still a lot of things that the European Union will have to proactively do to actually remove the dollar off of its pedestal from being the reserve currency. But the one thing that has happened is this fiscal union that we've seen in the European Union over the course of the last 2 weeks really, and I know you guys have heard me say this at least on the daily webinars that are free. Maybe, I don't know if I said it last weekend. It's hard for me to remember since we do broadcast pretty much every day. But I will tell you that what's happened over the last 2 weeks has really solidified the idea that the European Union is not a fad. It's not a experiment. It's not an experiment. It's now something tangible, and it is something that's real. And that is going by default, that's going to change the reserves of different central banks and what they hold versus being so lopsided in the dollar. You might see that migrate some dollar sales into European or euro buys, and that takes time. It doesn't happen necessarily overnight, but what that means is the euro is probably going to have a tailwind with it versus a headwind. And that's why this longer term trend of the euro of being batted down for so many years, why this euro realistically, and I'm giving you, like, let's talk 12 to 24 months out, which realistically now is probably going to take us back to the 130 level. That it's not going to happen tomorrow, but I'm just saying that realistically, the way I'm viewing it is I'm going to be buying the euro on dips now for the next 12 to 24 to 36 months. You look at the dollar, and this is a whole other, I don't want to spend the next 20 minutes talking about the dollar and its imperfections, but there's a lot of them. So if you think about it, the trajectory over the euro probably for the next couple years is going to be higher. So that means that you want to be buyers of the euro on pullbacks, and some pullbacks are going to be bigger than others. You might see a 500 pip euro dollar swoon when Italy says, forget it, we're leaving, and then the euro collapses 500 pips, and then you go out and buy that dip. So that, of course, that could probably happen over the course of time. But I'm just saying, for now, look at this weekly chart. That's kind of what I see the euro doing for the next couple of years. I hope that makes sense. Now, for those of you that don't normally listen to the daily webinar, the F.A.C.E webinar, make sure you look at the link in the description of this video and get signed up, because we do those every day. When I say every day, every trading day, Monday through Friday. And it's not just myself, it's the rest of the team, and plus Dale Pinkert does great interviews of many people that you'd see on CNBC. They'll come spend a half an hour with us. We got a lot of great interviews. And by the way, if you ever want to go back and listen to those interviews, if you go to where it says webinars here, and you can see like scheduled interviews, but like past interviews, Meb Faber, Mark Newton, Peter Buchvar. I mean, there's big name, Brianne Kelly. I mean, you could just, flip through and see how many great, David Keller. That's a great interview right there. Samantha LeDuc. I mean, there's, and then you can see what's coming up. All right. So if you want to listen to our webinars live, make sure you listen to, our F.A.C.E webinar. And then obviously if you're a member, you get the daily roundup and the European crossovers as well. And those are live every single day. And guys and gals, if you think that this video is going to be helpful for you going into this next week, especially as we head into, oh, by the way, we do have, we do have US GDP, FOMC, but there's other things that are happening too. We have German preliminary GDP also on Thursday morning. We have some inflation data at the end of the week. We have Canadian GDP at the end of the week, and we have Chinese manufacturing data at the end of the week as well. So a lot of things that could possibly move this market. And so I want to thank everybody for listening in. My name is Blake Morrow. You've been listening to the Week Ahead video, and I will see you on the F.A.C.E webinar on Monday. Have a wonderful remainder of your weekend. Thank you.